Well, let's get straight into some of the top stories we're covering, and specifically the inflation story here in the UK. Producer prices rose faster than expected in December, boosted by a sharp rise in crude prices and food input costs. The Office of National Statistics said factory gate inflation rose 4.2% last month, while output prices grew 0.5%. The data is likely to cause concern for the Bank of England. Consumer price inflation is already more than a percentage point above its 2% target. For more, we're now joined by our guest host for the next hour, Alpesh Patel, Principal at Profinium Partners, and Richard Milne joins us as well, Capital Markets Editor at the Financial Times. Thank you both for joining us. Alpesh, let's come to you first and pick up on this inflation story then. I mean, inflation has been running ahead of the Bank of England's target for, 10 out of the last 11 months or so. But they continue to say that this is temporary factors. We know about the VAT increase. Is it possible to work out what's going on behind, aside from that VAT increase? Do we have a real inflation problem in the UK?
There's good and bad inflation. This is not bad inflation. This is not inflation from consumer demand where there's a lot of money chasing very few goods. As you mentioned, it was input prices, it's things like oil, and obviously VAT rises. So raising interest rates isn't really going to help. It's going to exacerbate the problem, and we're better off keeping interest rates lower to facilitate greater growth than we are trying to think that we can use interest rates with this type of inflation to reduce inflationary pressures. It won't work. It'll actually make things worse.
So, Richard, is this all about imported inflation then? Is the inflation we're experiencing in the UK, is it, as you're saying, commodity price driven, things that are coming in from outside? Are those the two factors that we're looking at?
Largely that's the case. I think it is the core inflation in the UK is fairly low, and that must give some comfort, at least for the Bank of England. But of course it makes forecasting quite difficult. But I think from my position, one sort of perhaps potential positive here is that inflation might be quite good if you've got a large debt burden. You can almost start inflating away the debt, and I think that's maybe where markets might start to get a little bit worried.
Alpesh, I mean, does that make sense to you? I mean, that sounds like a good thing. You think markets get worried if we inflate away our debt? Sounds like a good idea if we have less debt, doesn't it?
Absolutely. We're going to have that. We're going to have that probably kicking off in 2012, maybe 2013, where we start getting inflation of the levels we saw in the 1970s, because we've had so much money inputted into the system.
That's a big call to say it's going to go up to. I mean, what sort of type of levels are we talking about there? We saw a huge oil price shock.
Well, yeah, 10%. I would not be surprised about if we got those kind of levels of inflation by then, because when you look at the amount of money which has gone into the system over the last 18 months, that's going to have impact on inflation in due course. At the moment it's not, because that money's working its way through improving our confidence levels and is boosting nominal earnings, at least for companies, and that's why you're going to see equity prices rise this year in particular, maybe 15 to 20% on the Dow and on the FTSE, is my view. But it's no bad thing if we do inflate our way out of the massive volumes of debt we've got, because how else are you going to be doing it?
But Richard, you have to be pretty gloomy about central banks' ability to control inflation to think that we're going to see something like we saw in the 70s. Would you share Alpesh's fear there?
Well, I guess the problem for markets is, while equity markets might start seeing this as quite a good thing, the debt markets are going to start to fret, and if yields do start to rise, I mean, we had a taster of it at the end of last year, particularly in US Treasury yields, where you saw them shoot up by a percentage point in a few weeks, 6 or 7 weeks. If that's replicated in the UK, that really starts to cause problems. That then affects mortgages, it affects the cost of credit for companies as well. That's where the difficulties could lie.
And Richard, have you seen in the last couple of weeks markets factoring in a little bit more seriously the threat of rate rises in the UK? Because I've seen some commentators say that, and then others say, actually, that's not coming. It's not coming this year.
Well, I think you're slowly starting to see this. You saw the European Central Bank yesterday. That's caused that's caused reflection in the Eurozone, and I think that'll start to factor in, because, I mean, if anybody's got an inflation problem, it's the UK, it's not the Eurozone. So, I think you do see in the US and the UK those inflation expectations have been rising fairly steadily. They're still, at a fairly reasonable level, but I just think there's the danger there that it could rise quite sharply.
Richard, Alpesh, thank you very much for that. If you want to get Alpesh, let's talk about the PBOC then. Do you worry that, I mean, we've seen this decent run in equities. Are we in this sort of sweet spot where we're talking about, we're still talking about recovery, and that seems to be going on pretty nicely in terms of the equity markets, but we haven't quite got our head round any rate hikes to come, and therefore we're still swimming in this sea of money that's been pumped in by the central banks, certainly in the developed world. Could tightening in China put an end to that?
No, it won't, for a couple of reasons. First of all, equity prices are going to rise because price-earnings multiples are relatively low, even as a multiple of 10-year Treasury yields, where they tend to, the PE tends to be about 3 times 10-year Treasury yields. That gives you some idea of the difference in risk profiles, how much risk people are willing to take in equities. And so even if you look at that multiple, there's upside move. That's why I say 15 to 20% on the equity side. Yes, okay, China's going to raise interest rates, but that's to try and control the bigger problem they have with inflation than certainly we have, and that's a good sign. The market reads that as positive. They're on top of things, as opposed to just letting things get run away. That's why it's a buying opportunity to get into some of the commodity-related stocks. They'll be down for maybe a week, maybe 2 weeks, but beyond that they'll be up. I'm long copper for this year as well. It's easier to foresee the markets over the next 12 months than it had been over the last 12 months.
Alpesh, thank you very much for that. And Ashraf, we have...
and we're getting lots of cool ones this year.
Cool
it's when you get the Dolce & Gabbana 3D glasses
okay.
and the Gucci pair, and you'll be able to use them on the beach because they'll double up as sunglasses. I promise you.
People don't look sort of strange.
No.
You don't see 3 versions of everybody on the beach. No.
No, you see the people in 3D, which is even better. But I promise you, you will feel very relaxed. For the royal premiere last year, we fitted up the Queen and the Duke of Edinburgh with their own monogram personalised 3D glasses, and they went away with them. So we haven't had those back.
Kidding.
That's cheeky.
Times are tough, you know.
No, but they were fabulous. If I were them, I'd have gone off with them. But so I can guarantee you that the royal family have some pretty cool 3D.
When I see them, I'll ask them for them.
Alpesh, are you much of a cinema going? I mean, we see a lot of extensions of existing franchises which seem to do very well. That always disappoints me slightly. I want to see some new creativity.
I don't know. I think we're seeing some new stuff. I mean, I've been going to the movies in pretty any country I go visit. You know, it's, as you rightly say, it's a great night out, and it's relatively inexpensive. And the cinemas have been full. It's very annoying. You know, I think to myself, where's the recession? I've got to queue up for tickets and all the rest of it. I wish they weren't so full, and I could sort of jump the queue. But they're full.
We've had a good start to the year in terms of the King's Speech. That seems to be
King's Speech started last weekend. Colin Mackenzie did a lovely article yesterday about disgusted of Tunbridge Wells turned into delighted of Tunbridge Wells, because our Saturday night performance in Tunbridge was totally packed out, and at the end everybody stood up and clapped. Well,
I was in the Odeon in Muswell Hill on Saturday, and that was also a sellout, and people were double booked. It was chaos. Rupert, thank you very much. Thank you very much for coming, Rupert Gavin, CEO at the Odeon UK and Europe. Alpesh stays with us.